Okay, so I want to talk about the trade I just took. I'm on EU daily time frame. Today is Monday, and as you can see, previous candle, which is Friday, took liquidity but closes well below the fair gap. So this gives you kind of an idea where we are in price. Let's dive to the 4 hour. Yeah, so we broke, just lowered this candle. We retraced. This was the rejection we saw earlier, and now price is going bearish. Also notice there are no fair value gaps in this leg, so this efficiency delivered. So I am at least bearish till we hit these lows right here. On the 1 hour, you can see very nice market maker sell model in action. This is also where I base my trade off. So for me, this is the buy side of the curve. This low is now broken right here. So we consolidated, and this kind of when London and lunch confirmed my bias kind of by being bearish by this move. So I was just watching this move while this move was happening, and I drew out this leg, this range. This high created this move, so therefore I'm using this high. And what I noticed was this bearish fair value gap on the 1 hour. Oops, not sure. Yeah, template minus. All right. So I was watching this also on the 15-minute, and while this low was formed, it was here. I was waiting for price to see what it was doing. So I was looking at the 1 minute. Let me move this stuff right here. So this was lunch low. At the end of the lunch session, price traded higher and created this right here. Create a consolidation, very nice. And after the consolidation, price went lower and lower 3 times. Then it created equal lows, took out those equal lows, and then just reversed. So the trade I took was this one. I went long somewhere, I think somewhere something around this. Kind of this was my trade. Yeah, 1 to 1 or something. Reason being for going long was were a few things because London already traded lower, Lunch already traded lower, and usually um, New York is going to consolidate or make a retracement. It doesn't happen that much, that often, that London, Lunch, and also New York are all three uh, making lower lows, going all three to the downside. So usually it's two of them. So usually when you have a classic sell day, there's London, then Lunch is the reversal, and then New York is also a expansion. But now we had an expansion in London and we had an expansion in Lunch. So I was not expecting an expansion in New York. That's one thing. With that in mind, I saw those relatively equal highs in a low resistance liquidity condition. Then price traded lower, and I saw price reacting from this discount for value gap with displacement. That was what I was waiting for. Also, we already made 3 moves, 3 legs to the downside. I saw displacement, so I entered based on this fair value gap. We also had a close in the higher time frame, 25% level. So therefore, I entered my trade here. And you can see my trade played out. But what I think I could have done better, and what I want to do better, what I want to improve on, is to be more patient. Because now in hindsight, obviously it's more easier, but I see this happen more. I've seen this happen a lot. And what I mean is, what I really love are those equal lows, right? So these equal lows, they get rated by this move. And notice this move are only bearish candles, all of the same color. Then it taps into this order block, and also we are tapping into this fair value gap, and watch where the bodies are closing above the fair value gap and in the top of the order block. And notice the low of this fair value gap is in alignment with the order blocking threshold. So that's a nice confluence. Then we see a really strong reaction after taking the lows and touching a PD array. Then price reverses. Here we can see price close with speed above this swing high. We leave a fair value gap. So ideally for me, I should have gone along here or here, something like this. Stop loss in this low and target something here, something like this, or a 1 to 6. I'm definitely fine with a 1 to 6. So that's what I really liked. I really liked so all the confluences I had. So the confluences I had are very important things are the equal highs. If those equal highs were not there, like this, but it was just a swing point, I would not have taken the trade. No, those equal highs are very important for me. So these were important. So we have the equal highs. We had 3 legs down. Remember these 3 legs. Then you have equal lows. And you have displacement from, in this case, discount premium array. So this is what they're here. And also notice what's also important is, yes, we are bearish and widely for longs. Is what I explained earlier. London plus lunch is placed lower already. Is another key point. And also what also a confluence is that the higher time frame dealing range is in discount. What do you mean with that? Well, if we zoom out, remember that I drew the dealing range in the 1 hour from this high to this low, and look where all this price action is happening. In an extreme discount, price is in extreme discount. So that's also very nice. So to remind you, this dealing range is what I'm talking about. From this high to this low, and this is where we are, where I took the trade up to the mean threshold of the fair value gap. That's what I was anticipating, because there are those consolidation, right? So that was my trade. Let me throw this back to 1 minute. There we are. So yeah, for me, I should have waited a little bit more, be a little bit more patient. But in the end, I think it was a good trade. Oh wait, let me do one more thing. Let's say this high, because I was, and I want to make this. Let's make this blue. Right. Yeah. So price in this case, at this moment in time, was was a break above the 25% level. But what was lacking here was a change in state of delivery. As you can see, those were all black candles, but this move where I entered did not, there was not yet a change in state of delivery. So if I would have waited, then this would be low. And here, this was a kind of change in state of delivery. But notice the candle was respecting the 25% level of the 1 hour dealing range. And now what we have, bodies in this, now you can see we have a change in state of delivery. We have a strong break also in market structure, leaving a fair value gap. So this is all therefore a way better entry. Stop loss, something here, and again, targets. I don't, especially not in a bearish market, because I'm trading against the high time frame trend. So I'd like to do something like this where I'm absolutely sure my TP will hit. Because sometimes it will just create a lower high and then trade lower, leaving a equal lows that it will get rated later on. Yeah, so ideally, this would be a much better trade. But in the end, I'm just glad my TP got hit. A safe stop. I got a 1-1 instead of a 1-6. Well, a win is a win, right?